If you thought rents in LA are high, San Francisco is gonna blow your mind. You do not want to speculate. You don't want to just buy and hope that there's gonna be appreciation. San Diego just introduced a new cap on short-term rentals. They have like a new permitting system and they're not gonna be giving out a lot of them. You wanna make sure that you're buying under list price right now because home prices are declining, and make sure that you're finding something that cash flows so that you can hold on to it long-term. You need to find deals that have strong fundamentals. For today's market analysis, we're going to talk about the country's most populous and potentially most polarizing state, which is, of course, California. If you're a current investor or aspiring investor, or you really know anything about the market in California, you know that home prices there are extremely high. Also, rents are really high. Taxes are really high. Everything is really high in California. And that is because it has an enormous economy. California is known for above average income, and some of the biggest companies, particularly tech companies, Hollywood's there. California has a little bit of everything, but when you look at the market in general at first glance, it is pretty hard to find cash flow in California. In today's video, what we're going to look at is some of the individual markets, some of the individual cities in California, what is going on in each of those markets, and what are some of the good ways for you to make money in the country's most populous state. Hey, what's going on, everyone? My name is Dave Meyer, Vice President of Data and Analytics. And for today's video, where we're talking about California, I want to give a big shout out to our friends over at Belong, because they provided all of the data that we're going to be talking about today about California. If you don't already know anything about Belong, they bring end-to-end home management services to your fingertips, whether you're an investor or just thinking about renting out your primary residence. If you are interested with Belong, you can enjoy guaranteed rental payments, vetted residents who love your home the way you do. You get 24/7 support for you and your tenants. You get cash flow solutions, an industry-leading mobile app, and maximize rental value. So definitely check that out if you are an investor, especially in California. They operate there because with Belong, you can create long-term wealth while earning passive income. So to learn more, check it out. It's try.belonghome.com/BiggerPockets. Again, we'll put a link below. Try.belonghome.com/BiggerPockets. So when we talk about California, let's just start on the highest level and look at a state level. California, as I said, is the most populous state in the entire country with nearly 40 million people, 39.24 million as of the last census, which is 30% bigger than the second biggest state in terms of population, which is Texas, which just hit 30 million, which is crazy. So there's all these other states, and then California is 30% bigger than the second biggest one. So California really is its own really sort of ecosystem. It has its own economy, and it's a very strong economy. If you look at the median annual household income in California, it's nearly $85,000, which is 20% higher than the national average. So when you look and when we start talking about some of the details of California, you see that prices are really high. A lot of that is in part or enabled by the fact that salaries in California are really high. In addition to that strong economy, I think it's also worth mentioning that they have a very high state income tax. It is 13%. I think it is the highest in the entire country, but it is worth noting that in addition to those high salaries, Californians pay, I think, the highest state income tax of any state in the country. Of course, these are just state level stats, and since California is so big, it doesn't really tell us that much. What we really need to do is look at a few of the, we have to look at the individual metro areas to really see what's going on and the investing prospects of each of them. And so I'm going to look at three of the biggest cities. We're going to look at Los Angeles, San Francisco, and San Diego. So first up is Los Angeles. The thing that stands out to me about Los Angeles, and you'll see this theme throughout a couple of these metros, is that the proportion of people who are renters is very, very high. So in Los Angeles, 63% of all households rent, which is really, really high and shows that there is strong demand for rentals. So if you are a rental property investor, that does bode well for you because there's probably an abundance of renters and people who are looking to rent long-term apartments. The other good thing is that rents are extremely high. Just for a studio, it's $1,700 for a studio in Los Angeles, which went up 10% in just a single year. A one bedroom is about $2,400. A two bedroom is $3,200. A 3-bedroom is almost $4,400. So we're talking about really, really expensive rents here. And if you know anything about LA, I've spent a little bit of time there. I'm not an expert, but it's a huge, huge area. So if you are interested in investing in LA, you really should break it down even further than just looking at Los Angeles, because there's so many different pockets, different types of rents, different dynamics going on. But at the highest level, what you see is there's a lot of renters and there's really high rent. But on the other side, which is a little bit more negative for investors and for everyone who lives there, is that prices are also extremely high. The median home price in Los Angeles is almost $800,000 as of this writing, which is more than double the national average. So income in California is high. I said it was only 20% higher than the national average. But when we talk about LA, home prices are more than double the national average. When you take these two things together, the high rents, but also the high prices, we can calculate what is known as the rent to price ratio. I talk about that a lot on these videos. If you're not familiar, basically what it is you take a month of rent, you divide it by the purchase price, and you get a ratio. And the higher the number, the better the cash flow prospects. And generally the rule of thumb, people call it the 1% rule. I usually think anything above like 0.8 offers pretty good cash flow prospects. But when you calculate it for LA, it's only 0.48. So it's well below what most people would look at if they wanted a cash flow market. And this means just basically that for like a traditional rental, if you were just going to buy a turnkey property, like just go find anything on the MLS and buy it, it is unlikely to cash flow. But as we're going to talk about in just a little bit, there are still good ways to make money in this type of market. The last thing I will say about LA is that vacancy is at 5.1% and has gone up a bit over the last year. It's up from 3.5%. So that is definitely something that anyone who's investing in that LA, Anaheim, Long Beach area is going to want to pay attention to. So that's just a snapshot of what's going on in LA. Really high rent, strong renter demand, but high prices, which can eat into your cash flow. The second market is San Francisco. And just like LA, there is a ton of renters there. 62% of the households rent in San Francisco. And if you thought rents in LA are high, San Francisco is going to blow your mind. A studio apartment, just a regular old studio apartment, is $2,200. A 1-bedroom is $3,000 a month. That is insane. 2 bedrooms, $4,000, and a 3-bedroom is $4,900. All of those have actually gone up a little bit this year, but slower pace. I think everyone who follows the housing market probably knows that San Francisco and the surrounding area has been hit the hardest so far during the housing correction, and that's true for rents as well. That said, the median home price in San Francisco is still ridiculous. It's $1.2 million. So I was saying that LA is expensive because it's double that national average. In San Francisco, it's 3 times the national average. So when you calculate that rent to price ratio, again, a proxy for cash flow, it comes at a 0.31%, which is by far one of the worst in the entire country. It's like if you want to just buy a long-term rental in San Francisco, it's generally not going to be cash flowing, but there are good ways to make money, which we'll talk about in just a minute. The good thing about vacancy at San Francisco is vacancy, it's actually come down. So it was at 5.6% a year ago, and it's now at 5.2%, which is pretty good. LA was lower, but has gone up. San Francisco is at least moving in a positive trajectory where vacancy is starting to go down. So in a lot of ways, San Francisco is pretty similar to LA in that they're both high rent, high demand, but high, expensive price cities. That brings us to our last of the markets that we're going to look at, and then we're going to talk about how you can take advantage of some of these markets, is San Diego. And so San Diego for a long time has been a really good short-term rental market, and a lot of people like to vacation there. If you've ever been there, it's incredibly beautiful. There's a lot of reason people want to live there. It's a really cool place. The weather's awesome. But San Diego just introduced a new cap on short-term rentals. They have like a new permitting system, and they're not going to be giving out a lot of them. So as investors, that option is no longer as appealing as it once was. And now you can start to look at long-term rentals instead. And so it's similar prospects, similar stats to the other cities that we see, which is that a studio is about $1,800, which is a lot cheaper than San Francisco, but still really, really expensive in national terms. 1-bedroom is $2,300, a 2-bedroom is $3,000, and a 3-bedroom is nearly $4,000 a month. It's crazy to think about, but that's what people pay in California. Just like LA, the home prices are about $800,000, and the rent-to-price ratio comes in at 0.44, which is the highest on our list, but still, again, I think you want to see a market at least 0.7-ish to think that, an average deal is going to be able to cash flow at least a little bit. And so seeing it at 0.44 means that unlikely, if you just go buy a random property, it's unlikely to cash flow. The great thing about San Diego, though, is that the vacancy is extremely low. It has dropped from 3.7% last year, which was already low, all the way down to 3.1%, which is ridiculously low. So that is a really good thing. The strong demand coupled with low vacancy and high rent bodes well for investors. So when you look at all three of these markets, they are similar in a lot of respects because they're expensive, they have good demand, and the rents are really high. That said, you can't just go out and really buy a turnkey property. And when I say turnkey, I'm not saying buying from a turnkey company. What I'm saying is just go buying something that's in stabilized condition where you can just go, you buy it and then next week you're renting it out. That's probably not going to cash flow. Instead, if you are interested in buying in California, and the appeal of buying in California is that property prices have historically gone up much faster in California than they have in other places. And in some of these markets, it's a little bit of boom and bust, right? They go up a lot, then they come down a little bit more than average. But since the market is starting to come down a little bit, it could be an opportunity to buy at a lower price point and then, hope that the price goes up. But you don't want to just buy based on that alone. That's just speculation, hoping that the price goes up. In my mind, that kind of mentality is really just upside. If you could buy low and hopefully it goes up, that would be great. But you need some element of cash flow, especially during this type of housing correction, to make a safe investment. And so the ways that you can consider doing that in California, I think there's 2 or 3 ways. The first one is value add. And if you're not familiar with this is basically buying a property that needs a little bit of work of renovations and then fixing it up and renting it out. So some people call this a BRRRR strategy. BRRRR is basically doing this value add, but with a refinance. I don't know, if you want to refinance, you can, but you don't necessarily have to. Because if you want to cash flow, you might need to leave more equity in your deal so that you can actually generate cash. And the reason I think right now would be a good time to look for these types of deals is that during a housing correction, which we are in, prices for homes that need work tend to fall disproportionately further and faster than homes that are in really good shape. And so you see people who have a home that needs work are more willing to negotiate right now, and prices are coming down more. So if you are interested in doing this kind of work, you obviously have to do the renovation. There are really good deals right now in these high price markets to get these rehab homes, renovate them, rent them out for a few years. Hopefully when the market recovers and starts to grow again, you could turn a really nice profit. So that is one way that you can do it. The second thing is house hacking. I think personally that house hacking is a good option in almost any market, and that is true in expensive markets too, because if you want to live in any of these cities, San Francisco or LA or San Diego, even as a renter, you're going to be paying a lot of money. And so you should be looking for ways to reduce your living expenses, and house hacking is a great way to do that. If you're not familiar with the term, house hacking is basically an owner-occupied investing strategy, which means you either buy a duplex, a triplex, a quadplex, you live in one unit, you rent out the other ones, or you could buy a single family home, live in one room and rent it out to your roommates. This is another really common strategy, at least for getting started for people. And house hacking can be really, really effective. Even if you don't cash flow, it reduces your own rent, which is the same thing as making money, right? If your rent was $2,000 a month and now it's, $700 a month, you're saving $1,300 a month. That's the same thing as making $1,300 a month, except you're not paying taxes on it. So it's actually even more money. So house hacking is another great option in California that can really help you. And then the third option isn't available to a lot of people, but if you have more cash to put down, so you can put more than 20% down, you could generate cash flow. With interest rates so high, putting 20 or 25% down in markets where the rent to price ratio is as low as these 3 markets, it's probably unlikely to cash flow, to be honest. But if you put down 30% or 40%, you could generate cash flow and then take advantage of either a value add or maybe potential appreciation. But you really want to make sure in this type of correcting market, regardless of what you do value add, house hack, if you buy for cash, whatever, you want to make sure that you're buying under list price right now because home prices are declining. And at least in my personal opinion, I don't know what's going to happen, but my personal opinion is that prices are going to keep declining at least through the next 6 to 9 months at a minimum, maybe longer. We'll see what happens, but just to cushion yourself and make sure that you're not catching a falling knife, quote unquote, where you're sort of buying while it's still falling, you want to make sure that you're buying under list price. So California is a great long-term market because the economy is so strong and the market, the housing prices tend to appreciate. And right now, it could be a good time to buy because prices tend to be going down. And if you could buy under list price, it could be a good long-term strategy for you, but make sure that you're finding something that cash flows so that you can hold on to it long-term. You do not want to speculate. You don't want to just buy and hope that there's going to be appreciation. You need to find deals that have strong fundamentals. So hopefully this helps you understand what is going on in California. Again, big thank you to Belong for helping us with all of the data here. We really appreciate you watching. We'll see you next time.